Okay, good morning traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, March 30th. We're about 10 seconds away from the third and final read on fourth quarter GDP here in the United States. Just wanted to open things up a little early to get this print in. Look, we're likely not to really get much unless it's something northbound of 2%. Survey says 2.1. A little bit stronger than expected. Let's see if the dollar's got any pop in it. This is the dollar index right here. And we'll see if we can't get any pace on that. Now, keep in mind, again, this is for the fourth quarter of 2016. So it's a third final read, but certainly a 0.2% uptick in the annualized read. Looking at personal consumption, up 3.5% versus 3. Core PCE, this is a big one, 1.3%. That's stronger than expected from a 1.2% clip. So a little bit stronger gauges. Again, this is looking back to the fourth quarter. May keep the dollar afloat here as we open the U.S. trade session. Initial jobless claims released at the same time, a little bit worse than expected, both on continuing and initial claims. It's good to be with you guys here to wrap up the week. Good morning, Peter, Mark, another Peter. Peter, we got 3 Peters today. Pooja, Sanith, good to see you guys all. All right, so on the docket for today, to wrap up the week, last time I'm going to give you guys a reminder. It's the final few days for March trade. It's the final few days for the first quarter, and certainly even for the yen crosses, the end of the Japanese fiscal year as well. So tends to get a little treacherous for intraday price volatility. I'm not going to put out an update tonight, guys. I'm not really going to advocate taking on new positioning into the Friday close of the quarter. So, for intraday stuff, just keep it light. I do think you could get some volatility here in the U.S. trade session today. Again, we'll go over the dollar levels. I think you stretch higher here, looking at that 139, 140 mark. But, just keep that in mind. I really can't stress enough. I'm only saying this, by the way, because I've gotten stung personally many times in this market conditions during these times. Because our regular strategy, our go-to everyday type of formula can get skewed, when you get these real large fluctuations in low volume markets where there's not a lot of market participation. So just keep that in mind. Good morning, Peter, to you as well. Pooja, says, I'm going out today evening, no trading. You know what? I'm with you. I'm not going to lie. So, yeah, it's a good time to kind of take a step back. Good time to reassess all our levels, which we're going to go over today, map everything out. So we open up April trade with a fresh approach. Couple things we'll go over today, guys, that I'm really excited about. April is historically an extremely strong month for the pound. The pound crosses seem to be at major crossroads. As far as the yen crosses are concerned, I can't believe I'm saying this, but they do have me excited as well. You might have seen it in last night's update. Pound yen, Kiwi yen, Euro yen, all coming off some really interesting levels. So we have a lot of themes to open up certainly next month with. But on the docket, I digress. For today, we got the DXY, we got the Euro dollar, Sterling yen, and Kiwi yen from last night. Very interesting. Both of the Kiwi yen and Sterling yen are unchanged, but the setups, I think, are outstanding still. We're going to continue to watch these major critical support junctures that both of these are testing. A quick update on the SPX, still holding near-term resistance. Dollar yen, still holding near-term resistance. Aussie yen, Euro Oz, Euro yen, dollar CAD, crude, gold, and I want to take a look at the dollar ZAR. The daily chart's just insane. This thing is textbook. So we'll take a quick look at that exotic cross as well. Okay, as always, feel free to throw out any questions or trade setups you guys want to review, or stop me with any questions at any point. Let's jump right in. So, relative performance for the U.S. dollar heading into the U.S. trade session, looks like this. Okay, sterling is the top performer. After seeing a little bit of losses overnight trade, you have that up 0.16%, CAD up 0.12, also have a slight move in crude today. Aussie and Swissy pretty much unchanged on the session. Biggest loser is the Kiwi and the Euro, down 0.3% a piece. We continue to like the downside in the Euro on last night's update. I am looking for a drop into 107. My bullish invalidation is 106.50, but that 107 handle is starting to become pretty big for me. So we'll go over the Euro dollar levels in just a moment. Okay, and a quick look at overnight interest rate expectations. Here's what the Fed Fund futures are pricing in as far as the next interest rate decision. Obviously, excuse me, it's not a quarterly decision, so there's not much expectation we'll get anything there. But you do see the June expectation now dropping to 53.5%. That was up as high as 70% earlier in the month, and certainly you've seen the dollar reprice that expectation since. Now, the one thing that we got yesterday that did offer some fuel for the dollar was commentary on the lines by some of the Fed members, some of which who are stating, the expectation of what the markets are saying, 3 hikes this year, 2 more beyond what we've gotten already. I can't remember who it was exactly earlier in the session that said, oh man, it's going to kill me if I can't find out his name, who said that we might be up for 4 hikes this year, which would mean 3 additional hikes. Guys, I don't want to even get into this commentary. I think it was Rosengren, actually. But, these things are going to continue to haunt the markets every time one of these guys come out and spill their expectations. Long story short, dollar index, here's what we're looking at. And here's what we looked at last night. So for the broader index, the DXY, again, very heavily weighted the euro. We've been following this for a while. If you remember the update from the 26th, we were looking at the index just as we opened the Sunday market, just below key support, now resistance at 99.43, 99.53. We stretched lower, just turned ahead of this critical region that we were highlighting at the 2016 open. Once we plowed through again 99.53, that was an objective break. We filled the gap. The break of that keeps us looking higher. 2015 high day close got taken out. I'm looking for that stretch into this zone right here. Last night, we looked like this. Okay, we were coming into that 2015 high day close. As I noted in the report, we were kind of straddling that. And while we could see a little bit of a downside play, you're still looking for a stretch here. I do want to note the ongoing divergence on multiple time frames, which has me a little concerned that you could see a pullback here. That being said, from a timing standpoint, doesn't mean we can't make another stab into that resistance. Game plan moving forward, all things held constant, looking for that stretch near 100 spot 40, 100 spot 39 to get the short side move. Keep in mind, this is the 618 retracement, so we have made a new low. I'm not going to stress that it's a retracement per se, but it's that swing low from the reversal day that we got right here on the 16th. And you have a couple of median lines, both on the upslope and the median line of the downslope that we were following. On the near-term charts, here's what it looks like. Okay, a sliding parallel of that same slope caught those lows perfectly. Could offer some resistance along that February 16th low. Both of those converge at 100 spot 40. So again, you can see a scenario where this thing spikes into one last high, turns around. The break sub, same level, 99.40, 99.50 would be needed to shift the focus back towards that key threshold we were looking at 98.70. But this near term is going to be my bearish invalidation level. If we pop through this, I'm not interested in pressing any shorts. But as it stands right now, this is what's going to govern the broader downside bias we've seen over the last 2 weeks. Questions on Pooja, thank you, Rosengren. I just saw that. Questions on the dollar index. By the way, quick reminder, I just had this note on my sheet. We have today finally, I appreciate everyone's patience. We're going to do the webinar. Jamie will hold a webinar today on the new SB signals. For those of you who signed up for the beta tests, you don't need to do anything, okay? Over the next few days, you're going to receive an email that's just going to let you know your username and password for Alert FX, which is the service that we use to shoot out the message. Again, you don't need to do anything, but have that information available, and from that point forward, you'll start receiving the signals. Really excited about it. Jamie's got a whole presentation today to really walk you guys through that step by step, and we're looking forward to your feedback. So definitely feel free to share, your feelings on that. And again, it will be recorded, and it will be available shortly after the broadcast. Pete, no worries on that. All right. Any questions on dollar index? Heading to the close of the month, week, quarter. Okay, next up on tap is pound yen, euro dollar from last night. Here's what the euro looked like. So Another trade that started off the week a little precarious. If you guys remember, we talked about euro dollar early, and it was all about this region right here. It was all about 108.72. You had the high day close at 109.08. You had the 200-day moving average in there. You had the upper median line parallel or basic trend line resistance. Forget the pitchfork, all converging on this critical area of resistance. Momentum, nice 3-point momentum support trigger gave out. Reversal day that we made right here on the 28th was all you needed to see. Downside break, filling the gap and taking us below the median line. Near-term targets, and like I said, the region of which I'm really interested in checking out, just into 107, okay? 106.90 is the actual 38.2 of the entire advance. But you also have this slope here, which is the 50 line. I don't know if you guys can see that. It might be a little light. But this is just the 50 line of the current operative slope. It caught the highs perfectly in February, and that actually dictated our near-term yearly opening range high. The fact that this quickly reversed is still going to keep the impetus on major resistance at 108.20. Okay, near-term support, looking for that dip into 107, 106.90 would be a nice area of support. I'd start to look for a reaction. You also have some swing lows there from back last year. Also note that our bullish invalidation level for the broader uptrend is down at 106.50. The daily chart isn't really reflecting that well. I'm leaving room for time here. But 106.50 is the 100-day moving average. It's the initial monthly opening range. If you take it into the intraday chart, you also have the 618 retracement of the near-term advance and the 50 line of the near-term advance. Okay, this is a near slope that we're looking at here. So, excuse me, this is the 618 line? It's the 618 line. Sorry about that. I can add it here. I just didn't want to clutter up the chart, but just to show you. Okay, kind of brings this out to here. You can see some nice touches here, some nice touches here. Kind of brings it into this zone here. So that's my bullish invalidation level. As long as euro stays above this, I'm actually looking for exhaustion on the downside. We don't have it yet. So the immediate threat, the immediate focus, as I noted yesterday, is still to the downside. Look for that 107 clip and a reaction down there. Broader bullish invalidation, 106.52. Key resistance at this point is still going to remain up at 108.20. Questions on euro dollar? Again, keeping things as objective as possible. Here's your weekly open. You stretch into that critical resistance on a sharp reversal. We tweeted this out on that day. Once you broke back below the weekly open and weekly opening range lows, that's the signal for the downside bias. Again, looking for that near-term support here into the 107. 107.14 is also a swing high. Here's the 120. Any questions on euro? That's number 2. Okay, moving right along. Pound yen, unchanged so far from yesterday. You got a little dribble and a bounce, but the game plan is just insane on this. And you know, this is something I was actually throwing around with Jamie last night. I do think, and I think he's on the same mindset that heading into next month, guys, we want to be looking at this broader theme shift in some of the yen crosses. They're all coming at some like radical levels that I just can't ignore. So for the pound yen, and kind of the major highlight that I wanted to make last night was just a very simple setup, okay? Here's the daily chart. The intraday chart isn't all that fancy and sexy just yet, but we're coming into big regions. The January low day close of the year, okay, converges on the lower median line parallel for the current operative slope. This slope has offered some very nice pivots, resistance, break, acceleration, more or less catch at the highs, downside move, median line catches resistance. We sat on the 50 line for a while, the lower parallel converges on the January low day close and the 200-day moving average. All converge right here. Momentum holding 40 support. Well, that's interesting, right? All the hallmarks of sort of change in behavior, if you will, or we call it sometimes a change in the momentum profile. In fact, when I look at a momentum profile like this, and I see that a trigger gave out here, which yielded a little bit of an upside pop in price, but on the way down, that same trigger offering support in momentum, also an indication of a change in behavior. So long story short, guys, it's way too early to tell, but it's important to recognize these turns and broader shifts before they happen, right? I don't want to wait till this thing's, northbound of 140 and I start chasing it. But at the end of the day, it does look, at least in my mind, like we want to be looking higher against this key zone. Wouldn't put it past this thing for 136.60. Okay, that's 200 pips from where we are right now. Do recognize you're working with a massive ATR here. Pound yen is not for the light of heart if you're newer to intraday trading or even intra-week trading, but certainly once it makes a move, it's gonna run. So from my standpoint, I'm looking for support right here into 137, 137.50. Larger key support, bullish invalidation for the reversal play would be 136.60. Near-term resistance, very simple. You got the 618 retracement. We're still in this range, so I'll respect that retracement, which converges on the monthly open. Okay, and that's 139.57 near-term resistance. Intraday, again, like I said, there's really not much to look at. I just wanted to put this chart out last night to give you an idea of what we're kind of looking at. Again, this is the 240-minute. You can see that key support zone. We didn't even really go for a touch. We turned just pips ahead of it, which is why I'm not going to really get too excited about this just yet. But on a stab into this region, I'll definitely be looking for some exhaustion. Near-term resistance, 139.50, as we noted. Key resistance and the breakout, which would shift the broader focus back to the upside, is going to be that 140.76 region. Nice confluence there. The dragon, she's poised. Tell you that much right now. I think we'll have a big month. And again, with the yen weakness that seems to be starting to rear its face, combine that with the fact that we are constructive on the pound, which we'll go over in just a few minutes, and the fact that April is historically a super strong month for the pound. Combine that with the fact that all these headlines about Brexit are calling for the demise of the pound. I just think it's a perfect storm. Now, timing, it's going to be the issue here, but we're moving into April, as it were, with that mindset. So just a quick note there. Any questions on pound yen? We'll go over pound dollar a little later in the session. Well, I mean, I guess we should just do it right now. There's no reason not to. Here's pound dollar. That was number 3. Pound dollar would be number 4. Didn't stretch my screen out for you guys this morning. Let me open this up a little bit. There we go. Pound dollar. So for sterling, this is what I would say on this thing. The rebound is coming, or the pullback is coming into an initial area of support. I'm a little hesitant to get too excited about it for a couple of different reasons. A, as Jamie had noted, the advance, let me take a step back. On this pullback, I would expect to see at least a three-wave down or some sort of formation to give us completion of a correction before a move higher. Keep in mind, if this is just a basic break of channel resistance or trendline resistance, we did touch it as support, so we can take off from here. That being said, as I noted yesterday, this is my butter zone and my bullish invalidation. 23.45, 23.36. We did a nice rebound off the monthly open here. Here's a nice catch of the weekly open here. So basically heading into the next few days to the end of the month, guys, watch for a break of this range. If the downside gives out, you could drop back into 22, and I don't want to be there for a 160 pip drop. My base case scenario, let me take a step back. My base case scenario would be more so for a break to the downside, look for divergence, momentum trigger on a drop into this zone to get long. End of the day, looking for that plow through major critical resistance at 26.75, 27 to really validate a much more aggressive upside bias in sterling. And heading into April could be the month. All right, so even if pound softens a little bit, I'm hoping that we see some yen weakness carry pound yen higher, or at least keep it afloat in the near term. But pound dollar, my only hesitation is where the dollar is trading at right now. I think the dollar can press a little higher, which is why I think pound could make one last stab lower before reversing. Questions on sterling dollar or sterling yen at this point, or Brexit, Article 50, Theresa May. Anything you want to throw at me, feel free. Okay, next up from yesterday is Kiwi yen. That'll be number 5. Kiwi yen looks like this. A very similar scenario in that I just wanted to highlight a major critical support that we were coming into on the daily charts. Same exact deal as pound yen, except this one has a little bit more of a critical nature because I really like the Fibonacci level that you're coming off of. This is a 1618 extension from the decline off of the yearly high of this year. Okay, so just taking into account 2017 price action, that first leg down off the January high, the 1618 was a perfect tag. Okay, add to that you have the median line coming off the highs. Perfect upper median line parallel tag. Nice work on the 50 line. Break, fueled another leg down. The median line for that structure, hey, look, it's right there. One more thing, really quick, 200-day moving average, which seems to be in play on like all of these crosses right now, but that comes in just lower. So the point being, the downside bias is at risk, having completed a larger Fibonacci consideration, the 200-day moving average and structural support. Momentum really just sitting on that 30 level. Sure, you got a trigger right here, which looks like it's just staring you at the face. Ready to go. Okay, top side pop above median line. You're looking for 79 figure. You're basically looking for the upper median line parallel, i.e. 79.88, depending on where you are in time. And then that would be an area of which you'd be a little bit more reserved, looking for some exhaustion. But, you know, the threat is there. So we're going to use this as a near-term support structure. A break below 77.30, forget about it. You're in a downtrend. Don't fight it. But certainly on the near term, the downside's at risk while above 77.50, 77.30. Here's what it looks like on the intraday chart. And here's what it looked like last night. Okay, so we had a near term, again, that descending median line formation. Keep in mind also 77.68. I don't have it marked here, but that's the Brexit high. So the June 24th high that we made, 77.68, you can see that that actually offered some support aside from that stab we made yesterday throughout the week. So key support zone near term, okay? Momentum, nice divergence on the intraday, all from last week into the close of last week, into the open of this week, even the last two lows, still staging some divergence here, gives us the risk for a little bit of an exhaustion play to the upside. Near-term resistance, again, that 50 line is just above basically what we made last night, but this is the key zone that you're looking for. Initially, 79, former lows, basic 236, take it back. It's also a former swing low from back here in November. And then you're looking for the upper parallel. You're looking for 79.88. Again, areas of interest for exhaustion, possible short entry for Kiwi. Goes with the broader theme of what we're looking at with the yen. Not so much with Kiwi, and this is the argument I was making. I'm not super bullish Kiwi, but again, based on the technical merits of this setup, I have to recognize the fact that the downside slope here is at risk because of this key support, and certainly the momentum signature is suggestive. You could see a little bit more of a pop higher here in Kiwi yen before turning lower. Any questions on New Zealand dollar versus the Japanese yen, keeping in mind all the yen crosses heading into the fiscal year, the end of this week, quarter, and month? All right. Moving into some previous updates, we're going to go over SPX, some of the some more yen crosses, dollar yen, Aussie yen, and then we will take a look at the commodities for sure. But before we do, a quick segue into the SPX. This was an update from earlier in the week, just highlighting this near-term resistance zone in the SPX. Here is the daily chart first. This is former slope resistance. You have the upper median line parallel for the current operative slope. You have a longer term slope that's also sneaking up in there. Gave us a near-term resistance range basically into like 2360. Here's what the intraday 4-hour looked like. You have 2361 into 2363. 100% extension, so 2 equal legs up would be 2363. A 50% retracement of the decline will be 2361. Near term, super near term, there was this embedded formation. Again, gave you some resistance right there. So what are we doing right now? We're probing this. We're probing this, but momentum isn't very, very convincing. So here's what we're looking at with the SPX right now. Again, to take it back to the daily chart, former slope support may be offering some resistance here. Again, we haven't really closed above this formation to invalidate the pitchfork yet, so I don't want to necessarily remove it, but price action is still below the monthly open. So I don't know whether to believe this breakout or not, guys. And at the end of the day, while obviously the broader sort of consensus is for stocks to move higher, on the merits of the breakdown that we did, we're still below the monthly open. Okay, and technically, we did break the monthly opening range, so I can't get too constructive here unless we clear 2370. And that's the level of which we put as our bearish invalidation early in the week. So for broader risk assets heading into the end of the month, I think you chop sideways to lower. Sub 2370, I don't want to be long the SPX. If we do clear that level, all bets off. But right now, that's sort of what I'm looking at. Here's the 120. See that ongoing divergence? Subtle. These subtle divergences, when they have a lot of reference points like that, tend to be decent triggers, in my humble opinion. So I'd be looking for the risk for a little bit more of a washout. Again, heading into the end of the month, this would be the time to do it. Now, if this is a legit break of basic resistance, basically the lows we just make should hold. And you should be looking for that pop above the monthly open to give us the run. All bets, all things held constant, I'm looking for this to be just a quick false break and a move lower. All right, but it's the end of the month. As a disclaimer, I don't have any exposure on the SPX at this point, but sort of that's the game plan I'm moving forward with into the close of the week. That is number 6. Okay, dollar yen. The bane of my existence. Here's what the abomination looks like. So this thing just can't find momentum, It's such an abomination. There's a reason I dubbed it that. Well, at this point, it must have been 8 years ago, 9 years ago. But look, the game plan hasn't changed since early in the week. We can go over the update. I can show you the levels. We can get all excited about it. But, here's what dollar yen looked like on the 27th. We were talking about this slope. We were talking about the positive bullish divergence. We were looking for a move past 1145 to validate the breakout, looking for a stretch higher towards 112. This is all we gotten all week long. That's dollar yen, guys. I don't know what to tell you. Still, the game plan remains unchanged, looking for that breach above 111.45 for an advance more towards 112, slope resistance. This region being a little bit key would change the entire picture in my mind if we break back above the monthly open, break back above these former swing lows, really nice pivot in price. That's 112.57, 112.70. But, this is the first sort of area we need just to get out of the way. Such a big region of a pivot zone for the dollar yen. And we're coming off slope support, so game plan remains unchanged here. Anyone got any questions on dollar yen? There's really not much new to update on that. So I'll kind of just jump through that real quick. Number 8 is Aussie yen. A little bit more interesting in my humble opinion. Here's what Aussie yen looks like. We talked about this trade also earlier in the week. Here's what we were looking at. So the daily chart, what we wanted to highlight, what we did highlight, was a beautiful outside day reversal off the lows, okay? Now these lows were important for a couple of different reasons. We didn't quite stretch into the low from that December stretch there, but we did come off of a nice region. You had slope support just lower. You had the yearly open right here, which on a close basis, okay, bring it into a close, just a line chart, was a perfect tag. You see that? That's your yearly open. So we came right into the yearly open and posted an outside day reversal candle. That's not something I'm ever going to ignore, right? That's a tell. Momentum with a nice rebound here, unable to make it anywhere near that 30 mark. And then price action, obviously, now coming in some near-term resistance. On the intraday, here's what we were looking at. That rally specifically took the pair through the weekly open, so objectively near term, took it through the weekly open and the weekly opening range highs. Aussie yen shifts the focus to the upside on a stretch like that. Initial targets were 85.15, 85.19, and 85.48, which we just tagged before pulling off. Here we are again, right into that ceiling. Now, where do we go from here? Well, the opening range has given out. Looking for that late week high. It's Thursday. We got the late week high. Could get a little bit of a pullback, but you want to stay constructive now above the weekly open. Basically, these former swing lows. That would necessitate support near 84.60. Topside break. I'd be mindful of this 50 line as a soft target. I don't know if I'd necessarily bail on the trade, but it would be an area of which I'd peel some off. The bigger target being 86. 86 being just some former swing lows. And the 50% retracement of the entire decline off of the February high. So that retracement essentially takes into account broader price action for 2017. So the levels, bottom line, super clear. Let's get ahead and clean this up a little bit now that you guys are with me on the line here. So we'll get rid of that 100% extension. We've sailed through that already. We'll leave that soft target there. And again, those swing lows, we'll reserve that as our near-term bullish invalidation level. If we topside break, by the way, again, your targets here and the monthly open into the upper parallel. But I'd be using some caution here, sub 85.50. Keeping in mind, yeah, Aussie's not seeing much of anything today. Questions on Aussie yen? Real clean, real clean. Again, I just wanted to leave this on here for the daily chart to show you the confluence region that we're running into. Not only is 85.50 that basic 38.2 of the decline, off the highs from February, but it's also the 618 retracement of this advance, and also the 100-day moving average, which is right basically what we're trading at this instant. So yeah, 3-day stretch after an outside day reversal off support, sure, give me a little bit of a pullback, but this region right now is near-term resistance. I think you got to respect that for today. All right, number 9 will be Euro Aus. Here's what Euro Aussie looks like. We've been tracking this one all week long. Pooja, I don't know if you're still involved with this one, but it's continued to play through the levels like no one's business. Trying to get re-entry on it has been difficult. That's where our signals we're hoping are going to make a big difference, guys, because on these trending markets, when the market does break and trend, whether it's intra-week or whether it's intra-month, those signals just do superbly. So really looking forward to that. But certainly on the downside here, Pooja says, I am out. It fell through the floor. Yeah, it certainly did. This was a big region we were talking about. Remember this? 140.50 earlier in the week. Here's what Aussie yen, by the way, or excuse me, Euro Aus looked like earlier in the week. This is even earlier. Here's the 27th. This was even earlier in the week when we brought up Euro Oz just coming off resistance. And that resistance region was 143, such a huge region. The 2016 low day close. It was also the 618 retracement of the decline off the December highs. You had slope resistance. I mean, it was jam-packed with stuff up there, right? You had a reversal day off that high, really shifted the focus to the downside with that move sub 140.180. So we're now below 140.55, okay? And that changes things. You're looking for the lower parallel, which is basically what we're checking right now. Here's what it looks like on the intraday. There's 140.50. We sat there, broke below it. It offered some resistance on the upslope. And here we are moving lower. 39.68 is a soft target. It's the 50% of the advance. This is kind of the big region that you're looking for at the 39.30, 39.25 level. Again, I wouldn't go chasing this into the weekly close, into the monthly close. You're seeing some divergence in intraday momentum. Could be a pop from here, but you want to stay bearish. I would want to stay bearish basically below this 50 line here, or the median line, excuse me, of the advance. Gives us a high, little bit higher than the highs we made in an overnight trade. I'm hoping once you do make a little bit of a rebound, tack on a quick retracement, a 38.2 or a 50% if it matches up with that region. That'd be sort of the nice area to start looking for some resistance. But ultimately right now, the threat is for a drop lower into 39.68 into that lower parallel of the current operative structure. All right, she's a beauty. Finally, took a while. Ultimately expecting the break of 39.20 longer term. You know, I'd have to see what happens when we get there, Pooja. I would, you know, just for the record, my broader opinion is that we're seeing some sort of larger dynamic change here in Euro Oz, and we should be looking for way higher high prices. I think we break this downtrend this year. That's just my humble opinion. So near term, whether we break lower from this formation to make a new low here and then rebound first, I don't know, Pooja. All I know is the near term game plan for me is to look for a reaction down here. If we break lower, I think the setback has a much more to go. Ultimately, heading into the third quarter, I'd have to say broadly, I am looking for more of a basing here to see Euro Oz much higher. I don't know. Could be wrong. There's a couple. I mean, this thing, look, at the end of the day, I try to keep things as objective as possible. We're still in the downslope. We're still in the downtrend. Momentum hasn't really been able to make much progress above 60. You got a downside trigger. You're basically coming into support. Yeah, it definitely could break. You know what I'm saying, Pooja? It could see a little rebound here and break lower. Again, longer term, which is not my trade style, I am looking for this thing to show us a little bit larger of a shift in behavior. Okay, thanks. That decline just seems to have too much momentum right now. Pooja, I'd be careful saying stuff like that, right? Because we've said stuff like that with Euro Key. We've said stuff like that with a lot of the Euro crosses that just continued to rip, right? And we never got a chance to get in. So I would just caution of you trying to take a position just based on this sheer magnitude of the move, especially on some of these crosses. That being said, yeah, I would agree with you. Heading into 39.20 near term, into that lower parallel, I definitely would be looking for exhaustion. As an intraday guy, for sure. Make sense, Pooja? Says yes, thanks. And again, I'm not trying to dodge your question. I just want to be as transparent as I can from what my thought process is on this. And right now, the focus is on a drop into this lower parallel to see if we react or not. Okay. That is Euro Oz. Moving right along, Euro Yen. Still at support, number 10. Here's what Euro Yen looks like. That's Euro Dollar. Here's Euro Yen. Very similar as the Yen crosses, as we've been noting. Very just big critical area of support I wanted to highlight is this region into 118.40. 119.26. Just lower, you have that sliding parallel from right here off the highs in October of last year. could be a nice area of support. Momentum holding 40 as support as well on the intraday, or excuse me, on the daily RSI signature. Could be a decent area of near-term support. Obviously, our near-term focus in the euro is just a bit lower. Near-term focus in the yen crosses have been weaker yen, i.e. yen pairs higher. So it could see some more chop sideways here in euro yen before euro is actually able to make a stride higher. But I do want to highlight this region. If 119.20 gives out, if the bottom gives out here, you got a nice stretch into like 118.40, and that would be the low close for the year, the July highs, former slope support or resistance, now support, again, all of those, if we break that region, and a 38.2 retracement of the advance. So you have 118.40, you have 118.46, all of those converge on the low close for the year. So big region of support near term. Obviously, immediate downside stretch is at risk. This is also the monthly open, and it's hitting us support. There's a million reasons to curb your downside appetite here for euro yen heading into the close of the month. Here's what it looks like on the intraday. Monthly open, stacked with the 618 extension off the highs, stacked to the near-term 764 retracement off the lows. In fact, if you bring that to a 786, it'll probably be a perfect touch. Boom, closer. And again, that slope. Divergence and momentum, all the hallmarks. Okay, it's the end of the month though, so just be careful. I'm looking for some exhaustion again into this region. If we can get some long triggers, great. If we break, again, the lows that we made in overnight trade, you're basically looking for 118.70, 118.40 would actually converge pretty nice on the near-term downslope of this channel. All right. Okay, yeah, divergence is not too apparent here on the 60-minute chart. More so just on the 120 and 240 as well. So it might take a little bit longer before this thing turns. Might see some more sideways action, but levels of importance are still that key support that we're pressing right now. Okay, moving right along. That was number 10. Number 11 is going to be dollar CAD. Then we'll move into some of the commodities here. But here's what the loonies looking like. Still, our focus is trying to look for a break of the broader ascending slope. Looks like we're getting it. And that's basically the break of the weekly opening range. We're making that break right now. Resistance we highlighted at 134 with our bearish invalidation level to start the week at 34.30. That held. We didn't quite get that high. So it's a good thing to see that price turn just ahead of that. Here's the downside break of 33.18. Here's the monthly open. I wouldn't get too excited till we clear 33. Once we do, 32.50, 31.80 are the downside targets I'd be looking for on a move here in dollar CAD. Just to go back to some of the levels we've been following on dollar CAD since the start of the week. Where art thou? Dollar CAD, right here. So here was the game plan early in the week. Bearish against 34.30. Need a break of the monthly open. We're at the monthly open. Okay. Let's see if we can't get this move to really invalidate that monthly open low to get to 32.50 and 31.85. Near-term immediate resistance. Right back at the weekly open. Bearish invalidation now. Well, we'll put that back at 34. So drop bearish invalidation from 34.30 to 34. Immediate resistance right here at the 33.50 level, the weekly open. Interim support at the monthly open, break there, looking for 32.50 and 31.85. Now, you might be tempted on a move like this, and this is something I'll always just take into consideration, to take into account the new high. Let's see what this looks like. Maybe this slope will be a more accurate portrayal of what price action is doing. If we do that, gives us a little bit more of a confluence region here over the immediate next day or two down into 31.85. But for now, I'm just going to continue to stick with the deader slope. Typically the slopes that are a little bit more lesser, the gradient is lesser of an attack angle, right? We don't want something too sharp. Will tend to be a little bit more fruitful, so we'll work with this for now. Any questions on dollar CAD? We've been sitting in this range for, oh man, pretty much 2 weeks. Still favoring a downside move. What does that mean for crude? Well, that would mean a rebound in crude. And everyone, and I mean everyone, who's been in these webinars with me for this week knows my thoughts on crude, right? We came off of a massive area of support. We've been talking about this area of support for weeks. In fact, if you guys check out the radar charts, I know these don't get updated often, guys, but I just leave them up there for a couple of weeks at a time because they're supposed to be broader conceptual trades. We'll go over the gold trade in a moment, but here's what crude looked like early in the month. This was on the 13th. Okay, we were talking about this key region of support, noting that 47 was a big, big area, and as long as that held, you'd really want to be cautious on the downside. Now, this did break the yearly opening range rather. The monthly opening range gave out pretty early in the month, so it was a beautiful trade. But after we hit that key support zone and stretched into the 618 and made that massive reversal, things changed. Okay, and we highlighted the risk for an upside move from here. Both areas of interest for exhaustion and long entries, both 1193, which we hit, and 1176/80, which we did not. Here's what gold looks like. Again, just a quick recap. I don't want to keep boring you with these same chart every webinar, guys, but just to show you, that's gold. Just to show you where we were on the weekly chart. Again, proving that we can't get that close below 48. And we were talking about this same exact chart earlier in the week. As this thing was sub 48, it was into 47 and change. It kept on saying, guys, we need to see the weekly chart close below this to validate the move lower. Now, I'm not bullish towards 55 yet, but certainly in the near term, there's no reason for us to be continued bearish at a support region like this, where you have confluence 52-week moving average, the 50 line of the advancing pitchfork, and a fib consideration all in the same zone, right? So intra-week, when you're looking at a weekly chart, doesn't mean anything. I need to see the close because that's what's going to dictate whether we're breaking or not. And as you can see on a close basis, it's pretty rock solid support right now. All right, so it shouldn't be a surprise to anyone. Here's what the daily chart looks like for crude, and then we'll get into the intraday in just a moment. Again, that 618, there it was. He had 3 times of which the price action continually tagged on it. Every single time you saw a really strong and marked recovery off that 47.16 barrier. This break that we made here yesterday validated a break of the weekly opening range. Shifts the focus higher, looking for a late week high. Near-term targets at 50.10. And the initial yearly opening range low, which is the October, I'm sorry, that's a different level. The opening range low, which comes in right at 50.69, so 50.70. Kind of works out well with the concept of seeing some CAD strength drive dollar CAD a little bit lower. Okay, okay, it's not an outside reversal candle, but it is going to be a strong reversal candle off support if we do close at these levels. Intraday, here's what the crude trade looks like. Again, there's your weekly open. Weekly opening range is set on a Monday, Tuesday stretch. You break on Wednesday, looking for a Thursday, Friday high. You're there. Okay. I like it. I don't know what to tell you. Look higher, 50.10. Next topside target beyond 50.10 would be the 51 region, would be a much, much, much stronger region of which to look for some resistance in my humble opinion. The near-term slope has been exquisite on this trade and certainly has offered some really nice pivots in price. I'm going to go ahead and remove this now because I want to see what this looks like. Bear with me one sec. Wow, that looks pretty good. Okay, it's a pretty sharp angle, so I'm not going to get too crazy about it, but you saw the 50 line offer some nice support. Actually, again, this is the 618. Let me see where the 50 comes in. Okay, so at this point, I'm actually more inclined to use the deader slope. So, yeah, for sure. Okay, this is what we'll do. Let me clean this up for you. First of all, the upper median line parallel with this slope further highlights that key resistance zone that we just talked about, which is going to be that 51.04 region. Okay, watch that. Second of all, if you take a parallel of this same slope, and this is something I like to always do to verify whether the slope I'm working with actually has merit, take it to some former highs. Doesn't get more perfect than that. If I move it again to this high, pretty darn close. Resistance turns into support. So there's a couple of different reasons I like this slope, and we'll continue to work with that. It does highlight that we're near term, basically tagging this 50 line, but you want to stay constructive above the overnight low, which converges right on the median line, again, giving us a nice level of reference of which to use as support. So go ahead and bring up your bullish invalidation level that we had highlighted yesterday at the weekly open. Go ahead and bring that up. I'd bring that up all the way to 49.20 at this point. If you break back below 49.20, look for a larger recovery. But this is the area of support. Near-term resistance targets on the long side, still 50.10, and the 51 handle is pretty big. I'd stretch that all the way down to 50.85 even, just to take into account the larger slope here. Some more cleaning of the levels. I would go ahead and get rid of that. Actually, no, it's still a swing high, so we'll leave that. That was the weekly opening range high. Yeah, other than that, levels remain unchanged. So guys, feel free to take a quick snapshot of this chart if you need the updated levels on crude, but certainly I'm loving it. McDonald's style. Gary says the abomination looks like it's about to abominate with a fake out near 111.40 region. Let's take a look back. Yeah, it could be a near-term fake out, but I'm still looking for the conviction approval of the break. Even if it fakes out, Gary, on a pullback into the U.S. trade session, doesn't mean it's not going to move. It just means that you might get a better entry on a pullback lower near 111.10 again. But ultimately, I can't deny the technicals are still pointing higher, in my humble opinion here on dollar yen. So don't go chasing. You have no way of putting any type of conviction stop on a long position from here, guys. So I definitely think, yeah, I think you're right on the near-term risk here is for a fake out a little bit lower, but I'd still be looking to get long. Still be looking to get long. We need to pivot back above this. This is a big, 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 big region. And it's been a clear-cut pivot. There hasn't been much back and forth around this region. Either you break and it's instant support, or you break below and it's instant resistance, right? We don't do too much of this around this threshold. Very low tolerance area is what I like to call these zones, where the market does not like to sit, right? You're either experiencing support and a rebound, experiencing resistance and a sell-off, or sailing through. But there's no philander, back and forth. So look for clarity on this, and keep in mind you're dealing with the abomination. So, all right, we're running into the last couple of minutes here, so let me get through gold, and we'll take a look at the quick dollar ZAR daily chart. I'm still in amazement of how clear that chart is. Here's what the gold trade looks like. Also another one that's making headlines. People are all aroused, and oh my goodness, what's going on with gold? I'll bring your attention one last time here to the weekly charts. Same gig. We opened up the week talking about this resistance zone, talking about this slope extending off the highs from we made in late 2015. governed the highs here that we made earlier in the year, and certainly that 52-week moving average right there, all converging right around 1257. So yeah, the upside near term was at risk. Heading into the daily chart, or excuse me, into the intraday chart, let me show you the daily one first, I guess. You had even more conviction. The high day close for the year 2017 comes in at 1252. You only got one daily close above that. 200-day moving average was the actual stretch high, okay, for the week. And momentum has been marking divergence since the start of the year, basically, leaving a little bit more of a waning momentum structure or waning momentum signature profile into these highs. So while I do think you get a kickback, the broader story still remains constructive. You're just looking for near-term correction off of this key resistance level. We're finally getting a move lower, and I think you have to respect it near term. Here's what it looks like on the intraday, and this is what we've been following since the start of the week. Okay, this slope here, it got messy for sure on the weekly open and the pop through, but there's the break below the monthly open, and here's the test of the weekly open. If we break below this right now, your levels are as follows. Okay, and bear with me one moment, guys. This is going to be really messy. I just want to see what this looks like. Nice touch. Nice touch. Go ahead and scratch that. And then even on the real near term, I just want to see if there's any merits to this. Bounce, bounce, bounce. Possible. Possible. Okay, don't get too crazy with this big one yet. I'm going to leave that one out. I'm going to use this dead or slope. Oop, exact one opposite. I wanted to delete this one. I'm going to use the dead or slope for now because we do see that we're having a little bit more reaction across that median line. And if you take a parallel off it, in fact, the point lows are almost dead on. So I'm going to work with this for now, which leaves room, again, for a near-term sort of bounce. I wouldn't want to see it as high as the weekly range highs, but basically that's what you'd be looking at here. Oh, I'm sorry, no. We're good. The weekly range highs are still at 200. Yeah, so I'd be looking at this as near-term resistance, downside break of the weekly open, which we're testing as support right now and converges on the median line. That's why this is important to me right now. You'd be looking for a drop into the 50 line. More importantly, that 38.2 basic retracement comes in with a stretch high here. It's at like 1235. Okay, looking to use this as a correction right now. You had some waning momentum into the highs. You were coming into that 200-day moving average. Looking for the correction to play a little lower. Ultimately, on a longer-term approach, you do want to buy it, but on the initial right now, do you think you risk a little bit more of a drawdown in gold prices? Questions on the gold trade. Certainly, we've been on point with the commodities, or at least gold and silver for the last couple of weeks. So look for a change in behavior in some of these as we open up April trade. Dollar ZAR. Please tell me that someone has been watching this with me. It's a trade that I personally don't get involved in very often. The spread's not really there. It's not really intraday trader's fantasy, but certainly technically it was insane. I tweeted this chart early in the week as we were posting this massive outside day reversal candle off of support. This is 100% extension from the decline off the highs that we made back last year. It's the median line of the current operative formation that we've been in since the highs of August of last year. And an outside day reversal candle off of that confluence region is all I needed to see, and that took you right through resistance right at the 50 line. Major resistance that we noted was right here at this confluence region, just below 1320.65. You had former trendline support, 1, 2, break, resistance, resistance. That converged there. And the upper median line parallel for that current operative slope also converged there. Guess what? 2 days testing it, 3 days testing it. Here's the pullback, interim support back at 1278.85. Textbook. I mean, you can't even make this stuff up, guys. So keep an eye on this trade. Keep on this trade. On that reversal, on the merits of what momentum did off that low, I'd be looking for a little bit more of a pullback near term, and then I'd be looking to get long again. I think this thing is going to make a little bit more of a consolidated reversal. You don't make some sort of bounce like that, then kind of just fall apart, in my humble opinion, especially when it's coming off of such a major key support target. And if this is some sort of wicked correction, 2 equal legs off the high would be sort of where you'd want to look for near-term support. Absolutely. Long story short, as long as we hold above that reversal day close, I'm going to highlight this too. Okay, 1274.60. I'd put that as my near-term bullish invalidation level at this point. But certainly a gravitational move back to the median line here, back to the 50 line, wouldn't be outside the realm of possibility for sure. Questions on dollar ZAR. And with that, my friends, wraps up the week of webinars here on SB Trade Desk again. Keep in mind that at 1 o'clock, Jamie will be up for the SB Signals webinar. Again, look forward to that. That will be archived. And also will be available for free for anyone who wants to check out the service. So we will be posting that, making it available. Pooja says the abomination, there's the fake out. Yeah, this is why we call it. It's earned its name well, my friends, over the years. Down but not out. Down but not out, in my opinion. I'd still be looking for a little bit more of a lower stretch to get in long. Don't think we're necessarily going to reverse course here just yet. DXY did make a new high on the back of that release of GDP, but here we are recouping all those losses, or recovering rather, or giving back, pairing all those gains that we just made. So opening range stretches have been made. It's Thursday. We're at those stretches. It's the end of the month, end of the quarter, end of the fiscal year for Japan. Watch for some wicked price action. We're going to close the books here for the rest of the month. Guys, like I said, there's not going to be an update later tonight. We'll pick things up back on Sunday as we open up April trade. See you later in Jamie's webinar. Best of luck trading and have a great weekend, guys. Cheers.